All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another US market open price action analysis session and Bitcoin day trade setup search. We're going to take a look at some of those things. Again, thank you for joining me. I've been streaming each day at the US market open. Okay, so with that being said, let's get started. I want to see if we can spot some interesting day trade setups today, but also we're going to take a look at the broader markets as usual very quickly because you have to have a good, it gives you good perspective for each day. Keep in mind, we have CPI tomorrow. Okay, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, let me just take this slide off. By the way, if you're new, oh, hold on. Okay, hey everyone. If you're new, so basically I'm going to run through the major markets first, starting with Bitcoin, but not all of them, just a couple of them. And then I want to get to the Bitcoin day trade time frame, okay? Because there seems, if anything, even if we don't have any trade setups, it's a good learning experience. Also, I'm not putting real trades on when I do that, just so you know. You should paper trade because we can lose, okay? The day trade setup that I called yesterday was a losing trade, but a small loss. Anyway, it's good to do it on paper. So also with that being said, real quick, make sure to check out my training program. All right, you can go to markpmarkets.com. It's in the link in the description portion of this video. The analysis that I do here and the trade ideas that I come up with are a result of that program, okay? And the goal of that program is really about using a process to gain perspective and context. It's not some kind of magical, I'm going to give you a special setup type of strategy. All of that is nonsense, okay? What I deliver is the least amount of information possible to make an actionable decision. That's the goal of the program. There are only 6 steps, and the most essential out of those 6, there's only 4 steps, okay? So if you can, that's adequate. And all the trade ideas that I've recently sent out, it's all based on that, okay? And yeah, they don't all win, but if you look at net, especially after this Bitcoin move, if you look at them all net, it's positive, okay? How do I know? We'll get into that here. Also, if you're not in my Discord channel, make sure you join it. It's still free. It's only going to be free for a few more days. Okay, most of you here are in it, but if you're not in it, join it. There's a link in the description, and that's where the signals are. You could see the trade history of the recent trades that I called in the euro, the pound, and Bitcoin, and you just do the math. Okay. Again, they don't all turn out to be winners, but if you follow them and you're able to have the context and perspective to get back in, which I'm going to explain here in a minute, that is how you capture something like this. Okay. Also, you don't expect to capture all of this. The first thing people, oh man, imagine if I shorted here and I closed it here, right? It's the first thing people think. But you have to get that greed factor out of your head. You have to, because you will never win. You don't understand what you're up against in this game, and you don't see the probabilities. If you were able to see them, you probably would not play, okay? But the industry does not want you to see that. They want you to trade. They want you to play because they make money on fees. Understand, you are just a fee generator. That is what you are. That is what we all are, okay? And we all start out in a particular way, thanks to human nature. You need to separate yourself from that. So anyway, go to my channel. Make sure you sign up for free. In the next few days, I'm locking the channel. I'm locking the premium channels, okay? So I mentioned yesterday, and some people have reached out to me. They sent me a private message. If you send me a private message on the server, I will send you a early bird coupon when I lock the channels, okay? An early bird coupon. I'm not going to email that out, and I'm not going to, side we have like the holidays coming and all that stuff, right? Yeah, I'm going to have a sale, but not this cheap, okay? So if you're interested, send me a message. Otherwise, no coupon for you. All right, let's go and let's get into what's going on here, right? A lot of drama. I hope you understand. Now, one thing I'm going to say, right? So the recent short that I called on Bitcoin was 20,250. I look smart now, right? But it was not easy to hold. There, you had this nonsense. And if you read all of my TradingView articles for the entire summer, I've been talking about a test of 17K. What's the low of yesterday here? 16,948. Okay, so we actually went lower, slightly lower, barely. Notice the pin bar right on that line. This line has been on my chart the entire summer. How do I know? Is it some kind of magic that I have? No. I'm able to read the probabilities of the broader structure. It's called context. So if anyone got you long, you can only blame yourself. There was no reason to be long this thing, none. Even with this bullish structure here that I've highlighted, there was no reason. In fact, the entire summer, I had not called one long, not one. Every article that I wrote had a bearish bias to it, every single one. Now, if the market wasn't cooperating, there were some swing trade opportunities in there on the long side, but my point was always this: don't expect much from the longs. There's nothing in the environment to sustain a rally. That's been my point since June. Okay. And everyone just, yeah, he's just a dumb bear, blah, blah. I don't have opinions. The market tells me what to think. And now the market asserts itself. Okay. Oh, I can't believe I'm long. Now, what causes this? All right, I don't care about the news, by the way. I'm sure there's some news. I don't even look. I don't have to look. I know the probabilities. Okay. I don't pay attention to news at all. When I need news, I ask Bill. Hey, Bill, what's the news? And then he tells me what the news is. All right. But I haven't even asked him about this news because I don't need to know. All right. I see the price action. But what I want to point out is this. What leads to this? It's not the news. The news is what stimulates everyone, right? And now everyone has to all get out. What leads to this are all the longs that got long in this right here. All the longs, all the people that have hope, all the people that can't control themselves, people that fear missing out, people that believe appealing messages that Bitcoin is reversed and blah, blah, blah. If you're one of those people, this is the risk you take in this environment. It means you don't understand context. It means you have no perspective. It means you're focusing on what you see in front of you, right? Before that move. It means you're focusing on that. It's the wrong thing to focus on. I tell people, look at the context, look at the context. I'm always thinking what can be here and what the probability of that is. That's where I'm thinking. Okay. So because of that framework, because of that mindset that I utilize, and it's the same thing over and over, I at least was able to avoid all longs, at least. Okay. Some people don't appreciate that, but people that are long are now, oh, it would have been nice if I could have stayed out of that. Right. I've been able to avoid longs the entire time. And obviously now we could see that was a smart move. Same with the stock market. I've been staying away from longs. I've been staying away from longs for a long time because the context, right? The market says not a good time to be long. I don't care what the experts say. I don't care. This banker has been in the business for 50 years. Doesn't matter. If they are not an insider, if they are not Jerome Powell, if they are not Elon Musk, okay, and even then, when they speak publicly, they're not going to tell you what they really know. They're not going to tell you. Why would they? It's not in their best interest, okay? So understand that. If you're not an insider, and this person that you're listening to is not an insider, that means they know as much as you, which is nothing, okay? None of us know anything. I know nothing, yet I'm still able to navigate this. All right. And I'm able to stay away from the wrong side because I can see the probabilities. And that comes from the price structure. All right. And that's what my training is all about. Anyway, so let's get into technicals here now that I'm off that rant. I know I got is Joel is here. Joel, that was some nice, I'm going to email you back, but that was some nice feedback you gave me. And I appreciate that. You know, any type of feedback like that is useful. So, you know, I certainly will consider what you said. All right, let's get into this situation here. So all right, so we got the bearish, we got the sell-off. All the people that got long here get banged out, they get margined out. That's what leads to this. That's when the momentum follows through. Too many longs accumulating through all here. Okay. Anyway, point is this: we are now entering the next support zone. It's this zone here. All right. Now we're not in it yet, but that's 17K to 14K. That is a support zone. We actually touched the upper boundary of it, and we've tried to reverse yesterday. All right, but as you can see, no follow through. Anyone that steps in front of that as a swing trade, it's a mistake. There's no confirmation here. It's extremely risky to go against this momentum, right? Even though at the moment it may seem like, oh yeah, it's working. Now you're stuck in this if you're not out of it yet. Okay, this candle right here is an inside bar. If that candle closes like that and we take out the low on the next candle, we have a momentum continuation sell signal again. That's an aggressive short. Okay, that's not a conservative short. The conservative short was up here. Now Steen remembers this trade because I called the short at 18.5, which was highly risky, got squeezed. But here's the thing, and this trade, I'm just bringing back the trade from 20,250 because it never went to its stop. I never called an early exit. But what if you got out? What if I don't like this, I'm getting out. What if you got out and you took the loss? Well, there was an opportunity to get back in. There was, and it was right there. That was on Sunday evening. You have to have, in order to be able to see that, to get back in, again, you have to have context. You have to understand what your probabilities are and what your risks are. I never called this entry right here because I wasn't watching. I can't watch 24 hours a day, all right? But that's a valid entry. And if you knew, you can at least have the opportunity to get back in if you exited on this trade, which never went to its stop, by the way. So if you just left it alone, the trade would have been profitable. All right. Usually it's better to minimize yourself from the equation as much as possible. That's why the way I enter the market and exit the market, it's usually, limit orders or stop orders to get in or out because I want to minimize myself as much as possible. All right. That's how you capture something like this, not by reacting. You let the market do the work. You let the market make the choices. Okay. You set your orders and then you just leave it alone. If you get stopped out, you get stopped out. That's how I played the euro on both of those trades. And actually, the exits on the euros were manual, but that's another story. But the entries were not. The entries were based on just a particular setup and the steps that I use. Anyway, all right. So again, back to Bitcoin on this time frame. If this thing it's very possible now. This move opens the door to basically the 14K support. Okay. 14K is a pretty significant support. Let's go back to the weekly chart. That is, look at this. Lower high established now, right? And we're going for the low, right? This thing is basically slightly lower, made the slightly lower low, but there's no reason to be long this thing. There's no reason to step in front of it. It's you're extremely aggressive if you do that. This thing is pointing lower. Okay, so the next support zone is there. You can see those lines. So we can go back here a bit. Look at this back here. Okay, see this old resistance back here? This dates back to 2019. You see that? So that is the next inflection point. That's about 14K. What's the high there? 13,828 is the high, basically 14K. That's where I get that number from. I don't just make them up. All right, so here's the thing. That doesn't mean we will get there, and it may take some time to get there. We may never get there, but that's the next reference point. Okay, so here's my plan. Now that we're starting to reach some very interesting levels, okay, this thing starts breaking because again, supports are likely to break in this environment. If this support breaks, I'm going to start looking at putting my long-term plan together. Okay, because now we're getting to some attractive prices between 14K. Possibly 10K. I don't know if we're going to get there, but those are very attractive prices. And that's where my long-term plan can come into play with the small bites. I have not started with small bites on Bitcoin yet. I have not started. I've been waiting. And, I think I'll recognize the time. We're starting to get near that time where small bites are now starting to become justified because these are just nice low prices. Keep in mind, I don't know where Bitcoin is going to go, and I don't pretend to know. It may stop at 15K. It may stop at 10K. It may go to 5K. I have no idea. Okay. But I wouldn't mind accumulating some inventory at some ridiculously low prices. Also knowing that it may take some time before that turns into anything. I said long-term plan. All right. So long-term plan means multi-year. Keep that in mind. Small bites means, you have a target allocation and you're taking like 1% bite a month, that's very small. Okay, understand that. So if Bitcoin continues to get cut in half, your investment is minimal and you don't become emotional. The mistake people make is they go all in. They have no long-term plan. They have no allocation. Oh, I have 10K. I'm just going to throw it in there. And then they watch it get cut in half. Okay, you cannot invest like that. And Bitcoin is still a highly speculative asset. I treat this like a penny stock, believe it or not. That's basically the risk profile that I assign to it. This is not a high quality stock. It's not. All right. So anyway, those are the things I had to say about Bitcoin. Man, I spent 15 minutes on that. So let's talk about some other markets real quick, and then we're going to talk about the day trade time frame here. All right. So I always check the bond market, right? And I'm going to look at some comments here too. Check the bond market. Always check the bond market. Like I said, I saw an interesting analysis where basically I don't know if it's very easy to think that people copy you. Maybe they copy me, maybe they not. But I was talking about the bond market way before everyone else, okay? Because I spotted it very early on. And what they do, they'll use an inverted bond yield curve, right? They'll use the inverted prices or whatever, and they try to make it look all interesting. And all they're doing most of the time, these people, and I'm not going to get on it, I'm not going to start a rant on it, but I'm just saying that a very common thing that I notice over and over is people like to take information that doesn't really have any actionable value, and they like to make it seem very interesting. Okay, so you think that you're getting valuable information when the reality is it doesn't help you at all. Okay, keep that in mind. It's like a pet rock. I mentioned this yesterday. You buy a pet rock is a worthless rock, but someone was smart enough to take this worthless rock, paint the face on it, put it in a nice box, and now that worthless rock you can sell for $5. So it costs you $1 to make, and now you sell it for $5. Oh, I got my pet rock. It's a worthless rock, but people like the novelty. Okay, so people dress up useless data all the time. Please don't be fooled by that. Okay, that's all I'm saying. So let's talk about the bond market. With that being said, you don't need layers of complexity. You don't need to look at all this complex economic stuff. The bonds rule everything. That's the first thing you need to know. The second thing you need to know is the bonds are in a bearish trend. That's all you need to know. These are the bond futures, which means yields are rising. Okay, yeah, you need to know that the prices are inverse to yields. Okay, great. But as long as we don't take out this resistance, I don't care what kind of price action we get in this area. I don't care. If we cannot take out this resistance, then it's bearish. I don't care if we have a little bounce. I don't care if we have a couple of green candles. If it can't take out a resistance, it's weak. I trust the price. If this thing is weak, that means rates are continuing to rise. If rates are continuing to rise, then we have bearishness everywhere. Okay, that means any rallies that show up are most likely irrational and unsustainable. Don't get sucked in. This is my primary go-to when I judge, are we in a time to invest or not? The bonds say no. Okay, at some point the bonds will change, and I check every day to see when do they change. It can take a few months. I recognize that. Also, what I expect, and I could be wrong, but what I expect is when the bonds change, what I expect to happen is the stock market is not going to react right away. The bonds may change, and this is how I spotted the top. The bonds had changed way before the stocks, and then eventually it took months for the stocks to realize. I'm looking for that same type of situation for the bottom, where the bonds change first and the stocks may look really bad. They may be making lower lows and this and that, but that's when the risk will start to be coming off. You're not going to see it. It's going to be invisible. Okay, but that's what I'm looking for. I don't see it yet. All right, anyway, that's the bond market. Always check every day. Nothing has changed here. Okay, so when everyone starts pushing bullish arguments on you, just look at this thing. Next, let's take a look at the stock market real quick. Right now, keep in mind we have the CPI number coming out tomorrow. Right now, the CPI, it doesn't matter what you think. Don't have any opinions because the market may interpret it another way. Let the market figure it out. Look at the NASDAQ. Right, so all that bullishness that people, look at the stocks are rallying, nonsense. Lower high off of resistance. This is bearish. Okay, Nothing bullish about this. Stop getting stuck in nonsense. If you're stuck in this, or you had some kind of optimism, you have to question the sources of information that are luring you, or that are stimulating you. You have to question those sources. It means you're not objective, because there's nothing that ever says be bullish on this, on the bigger picture. Nothing. If you're a day trader, that's another story. We're talking about swing trades right now. All right, so what's going on here? This is an inside bar developing, right? NASDAQ is right now minus 110 points, whatever. It can change by the close of the day. But if we close like this and we take out the low, that's a sell signal in the NASDAQ, right? Going into CPI. If that CPI comes out and the market doesn't like it for whatever reason, this thing is in a position to sell off, okay? And we've been flirting with these supports. This lower high sticks, lower low is likely. So again, no signals to be going long here. All right, let's jump over real quick to the dollar index. So dollar index, surprise, surprise. How surprising. Look at this. Okay, have I not been talking about looking for the dollar buy signal? It's trying in a level where the buy signal is likely to develop. I don't need to read news. It's all right there. I trust the price. Inside bar, we close like that, we take out the high, we have a long signal in a location where a long signal is likely to develop. Okay, again, it's not confirmed yet, but the setup is there, it's appearing. Candle needs to close, okay, and then we need to see the new candle, but that can turn into another euro short, and that's what I'm watching. All right, so keep that in mind. Let's take a look at the euro real quick. All right, and let me see what I mean. Well, this is inverse. I mean, this is exactly the US dollar, just inverse. The same chart, inverted. So there we go, okay? Resistance Stian, like I told you, we've been talking about the Stian. The resistance area, it's a place to look for shorts. This is the beginning. This is the setup, okay? Inside bar, inverse of the dollar. We take out that low. I'm going to look for that short. I'm going to most likely call that short. Now, it doesn't mean it will work, but this is probability favors, like that's where everything lines up. That's an isolated opportunity. The risk shouldn't be ridiculously high either. I'm not expecting to risk over 100 pips on something like this, okay? I mean, at this moment, if the candle closed like this, the risk would be what? What is the high there? 1007, right? And the low. So what is that about? That's about 70 pips, something like that. So that's about right. Between 50 and 70 pips, that should be about the risk. That's the typical risk on the euro. All right, does that make sense? So now that I've spoken about all those things, let's talk about Bitcoin on the day trade time frame. And let me just run through some of your comments, because I've been ignoring you guys. I apologize. So Stian, it's good to see you. Okay, Eligius, Mr. Plow, glad you made it. Oh, we got my Romanian. Alex is like the most committed Romanian. Okay, okay. Yeah. Okay, Joel, good to see you. All right, Kai, what a day. Okay, cool. Good to see you, Kai. Vanessa's. Okay, are you a Sagittarius? No. That's a strange question, but okay. That's usually, I guess, like when you're like dating, people ask you that, but we're not dating, so I don't know. Anyway, no, I'm not. Okay. Hey, Jeff, good to see you. Armin, how are you? Okay, no, hey, no problem. Elizabeth, good to see you. Kim, all right, all my hellos. Okay, so now let's get into Bitcoin on the smaller time frame. Now we're going to go to Bitcoin perp. All right. Now again, this, you should paper trade this. This is an exercise for paper trading. I do not suggest using real money. We can have a winning trade, okay, but the idea here is to really give you an idea of the thought process involved. Notice, I don't have any oscillators on my chart. I don't have any nonsense on my chart, no gimmicks. Do you realize here, we're going to start with the 30-minute. Do you realize, like if you go on TradingView, do you realize that if you look at that, like their library of tools that you can put on your chart, there's thousands of them. Have you ever noticed that? There are thousands of them. Why are there so many? Shouldn't we only need like a couple of them? I mean, it's because they don't work. That's why there's so many. All right, all these variations of basically the same thing over and over. They're just thousands of gimmicks. You don't need them. The most adequate information that we need to make an actionable decision, whether it's a day trade or a swing trade, all the information can be extracted from the chart, okay? If you understand how to put this into perspective and what carries more weight compared to something else, okay? It's basically relative relationships. So first thing we're looking for here, we know the general structure is bearish, okay? We know that. This is the 30-minute chart, okay? And I'm looking at the perp chart. Whoever you trade futures through, that's whose chart you should use. Now, so we see the lower highs, right? We see the structure, okay, bearish. Now let's look at levels. So we have a support right there, right? That it's bounced a number of times off of that. We have a resistance right there. Okay, we have another resistance up in this area right here. We have another resistance here. Those are our intraday levels. Now we can zoom out a bit, see if there's anything else on the radar. There's really nothing there unless I have to check a bigger picture. So for intraday, we don't have to go too far. You know, a couple of days maybe. We don't have to go too far out because these levels are highly random anyway. All right, but we need some reference points. So this is a reference point for support, and we have our reference point for resistance. In fact, you could probably make this into a zone because it's kind of close. All right, so here's the thing. We know the general structure is bearish. So what to expect? Can anyone tell me? Let me interact a little bit here. Can anyone tell me if our general structure is bearish, what's reasonable to expect from supports and resistance levels? What is reasonable? Can anyone tell me? Is Bill here? Because Bill's probably going to give the answer. No, Bill's not here. Okay. Let's see. Oh, Kev. Oh, nice. Really, Kev? I'm very close to there. I'm like 15, 20, well, about 15 minutes. Okay. What are you, in Jersey? You live in Jersey? Interesting. Okay, Elizabeth says, supports break, resistances hold. Yes, good answer. Okay, I was going to yell. Bill usually puts in the answers, and I have to yell at him for giving the answers away. You're right. So if the structure is generally bearish, it's reasonable to expect resistances to hold, not break. So that means there's a greater probability that the shorts are more likely to work intraday. Okay, so you're expecting more from the short side, less from the long side. It doesn't mean you have to avoid longs. I mean, look at this. Right now, this thing is trying to find some support. It's trying to get a little buying action going on here. Okay, no problem. As a day trader, we have no opinions. We want to have some sort of sense of context, but we want to have what should we expect from longs? What should we expect from shorts, right? That's the question that I'm always asking myself. Right now, we should expect more from shorts, which means resistances are likely to hold, okay? Now, supports are likely to break, but if they don't break, right, that could be an opportunity, like what's going on right now. Some longs are getting squeezed, some shorts are getting squeezed, right? They got short, they were a little too aggressive, whatever, and now this happens, okay? That can be an opportunity for a long, but don't expect much from it. That's the whole thing, right? It's all about shaping your expectations. And as a day trader, it changes constantly. It can change minute to minute sometimes, okay? That's how fast you have to be as far as gauging and judging, and that may lead to a string of some losses. You may have 2 or 3 losses in a row, and that happens to me all the time, but I'm able to make it back, okay? And sometimes if I'm in those situations, especially in the S&P, and I make it back, I turn it off. People make the mistake of, they have one good trade, and they start out with a good trade, and now I'm going to trade some more because I'm on a roll. Turn off the platform. Take your money and run. This is not an environment for, this is not an easy money environment. If you can get green on your first trade as a day trader, get out. You're done. Close the platform. And if you say, but I need to make $200 a day and I'm only up 100, you're asking for trouble. Okay, that's when you go up from up 100 to minus 300, and then you hold on to it thinking it'll come back. Don't make those mistakes. Okay, so now this is the 30-minute chart to give us some perspective. Oh, from New York. Oh, okay, cool, Kev. Wow, interesting. You're like driving right by me right now. That's very cool. Okay, so let's go to. I got a guy in the upper west side who wants to get together. Maybe one day I could put like a group gathering. That would be really fun. Okay, in the city. He's in the city. So I've always wanted to do like a presentation in the city, like a seminar type of thing, but I just haven't had the time to do that. But I would like to get into doing live presentations, kind of like some of these. I'm not going to mention any names, but I like talking in front of a large group of people. It's fun. Anyway, especially about this stuff. So here's now the 5-minute chart, right? And we just talked about how resistances are likely to hold. We recognize the general structure, all that stuff. So if we get a sell signal here, right? I would say this is like more of a minor resistance here, right? If this thing closes like this, we can see a sell signal. Let me see, what time is it? Okay, so we have a minute before this thing closes. Let's see how this candle closes. On top of that, we talked about the stickiness of resistance levels. You have a little mini double top situation right here. That's another sign, okay? And it tried to sell. As you can see, there was some selling attempt. This price action back here was a selling attempt, right? And then they got squeezed temporarily. If it reverses again, right, that can be, that when I see something like that where it tries to sell, they're wrong, and then it tries again. Here we go. All right, let's see how this candle plays out here. Then a lot of times it fakes out the longs again. Okay, it fakes out the shorts and it fakes out the longs. Let's see how this thing goes. This may be a sell signal here. So the low of this candle is here. All right, that is 17. We're going to round that to 1750. 17,650. All right, it's not the exact price, but it's always a good idea to give it a little more room. Let the market work, because this thing can be noisy, right? That's the place to go short based on this idea. All right, now the idea, now you may say, but how is that a short when this is nothing but higher low and higher high? This structure is kind of meaningless, okay, in the eyes of even the 30-minute chart. The 30-minute chart is biased to the bear side. So if there's going to be some kind of follow through or anything, we should be looking more toward the short signals. So this would be the entry here, okay? The stop would have to go up here somewhere. How much is that? So if 17,650 is the entry for the short, what's this up here? 17, that's kind of wide. That's like what, 823, that's like what, 150 points. That's a little wide, all right? But is that, are my numbers right here? Yeah, that's, so yeah, 650. Where is this over here? That's 600. Okay, yeah, it's about 150 points. All right, that's the risk. So if you don't like that idea, I'm not going to risk 150 points, then you shouldn't take this trade, first of all. Okay, so sometimes these candle ranges are smaller. You're like, oh, it's only 50 points wide, or it's only 100 points wide. Okay, but on the average, I'd say about 100 points is within reason. All right, but the whole idea of placing these orders in advance or knowing the prices, you may not have the time to place this in advance. Oh, I got to place the stop order. Some platforms may not even let you do that. All right, so, but at least you know the numbers in advance, and you don't react, you don't do anything until it touches the number. So look, it's trying, oh, it's a short right now. No, it's not a short right now. It hasn't taken out that number. This thing can easily close green over the next 5 minutes, which would keep you out of a trade. Like if you short this thing right now, okay, and it goes like this, that's a loss that you would be able to avoid if you just let the market tap you in. Let the market prove, okay? That's the idea. People just react, okay, because they think, oh, I'm going to get a better price if I short this thing now. And people say, well, wouldn't you get a better price and lower risk if you short it now? Yeah, but that's assuming I'm right. I could be wrong. On the day trade time frame, optimistically, you're going to be right only half the time, okay? That's being optimistic. Maybe sometimes that will change in a better environment, but this environment, I'm going to go with 50-50, okay? So keep in mind, let's see how this thing goes. How does this thing close? What price is this thing now? 67, 17,670.81. Okay, we're still 30 points off, okay? No reason to get involved here. Does that make sense? So what you're learning, what I'm showing you here, is basically how to let the market make your decisions for you. You should minimize yourself from the equation as much as possible. As a day trader, that's what I do. All right. While everyone else sits there, oh, I'm going to take the short here, and then they draw like a fib thing. Oh, look at the fib. I'm going to short it here, and then they cut off the video, right? Because these are usually not live streams, and then 2 hours after, oh, look, I made a profit. Yeah, great. What if that trade was a loss? Would you have shown us the video? I don't know. I haven't seen too many live streams. I'm sure they're out there that call trades like in real time. I'm sure they're there, but I haven't seen too many of those. The ones that I tend to watch are the ones that are like after the fact. Anyway, um, I have audio. Oh, cool. Well, Kev, and that's yeah. I mean, I'm trying to make an arrangement. Like, I was trying to do this at one time, but I just got too many other things that got in the way. But I would like to do like a I wasn't going to do like my own personal seminar. I was going to do like a like you have these places that have like speakers come by and whatever, and I wanted to put together like an event with them, with someone, some kind of someone, you know. But anyway, I don't know. I'm not there right now. I'd like to do it, but I'm just not. I just don't have the time. I have to get some other things together, but it's certainly something I'd like to do. So I'll keep all you New York and New Jersey guys in mind, when I do something like that, because I'd love to get together. All right. Anyway, so how are we doing so far? I'm going to do this for a couple more minutes. So, I mean, just look at this candle. All right. Look at this candle. Now, a few other things I want to point out. Okay. We got the close. All right. Let's see what we got here. So another inside bar. It's a smaller inside bar, right? No trade yet. And now we have more indecision. So what to do here? This can actually turn into a buy signal. And the buy signal is right here, 17, what is that high? I can't read it. 17,756. Okay, we are at 730 right now. That's an aggressive long. It's against the bigger picture. All right. So if you want to give that a try on paper, in fact, you know what I have to do? I have to set up I'm going to set up a paper trade platform thing on here so I can actually take the paper trades and we can see the P&Ls. Okay, and we can see how I adjust the orders, right, and that kind of stuff. That's in the plans. So here we go. 756. So we'll give it 760. Okay. 760 is going to be the number. So if 760 touches, it's a long. Okay. Now, how much to expect? Here it comes. 754. Oh, there we go. Long. Okay. 760. Right. Long. So we'll see if that thing follows through. The stop on something like that is going to have to go on this low. Right. So basically, that 650 low, we're looking at a 110-point loss. Notice I'm focused on the loss, not on the win. Okay. If this thing turns the wrong way, you're looking at losing 160 pip points. That's reasonable for a day trade on Bitcoin. All right, on this time frame. So that means we need to make at least 160 points. At least that's the ideal target. It'd be nice if we could make a little bit more than that. 1.5 to 1 would be better, and that's not a function of greed. That's a function of justifying your risk. If you can get 2 to 1, great. But don't think you're going to get 5 to 1. Now you're being ridiculous. Okay. Again, that's I want to make the least amount of money possible for the least amount of risk. I want a high probability of exiting this thing green. That's what I want. Right now, if I get a conflicting signal somewhere along the way, and I have the opportunity to get out green, or I have the opportunity to take a smaller loss, that's also a consideration. Okay. See what I mean? See how it turns like that, and it gets all like this, right? There's no reason to react to this yet. That's why we have a stop. If you get out now, it's premature. So, but I don't want to lose. Right, but you may be giving up something that may turn into a winner. How much time? We have 3 minutes for this thing to close. Let's see. All right. You can't be too jumpy. So if it goes to the stop, hey, we knew in advance that it was going to cost us 110 points. Okay. If you're not happy, if you're not comfortable with that, you should not take the trade. So that's why I focus on the risk first. Look at that. Because I know this happens. This happens all the time. All right. 680. All right. So let's see. What was the number? 650 is the number. 650 means we're out. Okay. And don't make the mistake of saying, well, I'm going to hold it a little longer. Bitcoin is so beat up, it has to bounce. If you do that and you don't take that loss, you open yourself up to huge losses. Don't make that mistake. Take the loss. Okay. Really, if anything, this is a good exercise on how to take the loss, because that's really, if you want to say that there's any kind of skill in this game, that's the skill. All right. Knowing how to take a loss. So let's see how this plays out. We got 2 minutes. All right. And if it goes straight to the stop, which it looks like it's attempting to do, you take the loss. If it reverses again and gives us another long, it's another possible long. All right. And this kind of stuff happens. This happens to me in the S&P all the time. All right. So, that's why I don't get all excited and all optimistic, even though this was a buy signal. Okay. The only argument against that buy signal is we're going against the bigger picture. All right. That's really the only argument against it. But it doesn't mean that those don't work. I mean, look, there was some buy signals earlier. This one worked out okay. Okay. And there was some profit potential in that. So that's the way this game works. Okay. People want like precision and they want to make money like on every trade. It's not going to happen. You need to understand how to take losses. So where are we at? 655, 62, 55, 50. All right, out. This thing stopped out. 48. I saw 48. 110 pip loss. Point. I keep saying pips. 110 point loss. Okay. Take the loss. Even if it bounces right back in your face, wait for the next signal. Don't jump in and out because you're just going to churn yourself. Okay. That's the day trade game. So has this structure changed? Look, it goes right to the stop and turns. Okay. Don't get mad. Just whatever. Okay. This thing still may close weak. But the point is this. On the intraday, we know our bigger picture is generally bearish intraday, but we do have these intraday supports. If those supports are sustained, this thing is still likely to squeeze higher, even if it's just a short-term move. So we took a 110 point loss. If you can make that back now on the next buy signal, hey, you break even and you're done. That's how it works. Okay. That what I'm showing you here is not glamorous at all. And this is the kind of nonsense you have to deal with. So now look, it's turning green again. A mistake to avoid in this situation right here is you don't short it. I'm going to reverse. I'm going to go short at that bottom because this thing's weak. And now you get stuck on the other side. Okay. Notice I don't do that. I don't stop and reverse. I just get out. And now we see what the next candle gives us. This candle may start out green like the other one and then turn red again. So, let this thing give us a clean setup. If this thing gives us a green inside bar, it's going to take 5 minutes. If this thing gives us a green inside bar and takes out that high, then you have yourself another buy signal and a little mini higher low. That mini higher low can work its way up to here. Okay. So that would be an ideal target in that situation. Does that make sense to you guys? So again, I hope you're doing this on paper. I hope no one had to really sustain a 110 point loss, but that's reality, okay? And it's not sexy, and no one wants to hear it. Everyone wants to see, oh, I bought this thing, and we make 100% profit every time. That's what people want to see, I understand. But I'm showing you reality here, okay? And the thought process that goes on behind it. All the streams that show trades are losing, at least those I have been. Okay, interesting. I mean, I don't pretend to be something that I'm not, right? I know reality, and I know the day trade reality. I've been in this game a long time. I started out as a day trader, okay, and I've seen a lot of money made. I've seen a lot of money lost, and I know, and it took me 15 years just to realize what the problem is. Okay, it took me 15 years to realize why it's so hard to make money in this game. All right, so anyway, I'm just going to give this, we're going to do one more 5-minute candle here. Look at this. And I'll leave you with that. So again, nothing to do here. Do you see how I'm waiting for the system? I'm not reacting. Oh, it's long. I got to get back in. I'm not reacting. I'm just waiting. Okay, let's see how this candle closes. This candle started out, right? It was kind of weak. And then it kind of turned again. We're going to close here. Well, we got 3 minutes for this thing to close. It still may close bearish. It may close red. If it closes green, then that's it. That's new information. Okay. If it takes out the high of the green candle, that's another long, basically at the same price that I got long at the first time. So it was my stop too tight? Well, based on the structure, that's the place the stop should have been. It just stopped me out too. That's frustrating, but it's going to happen. Get used to it. Okay. The goal now, since we have a 110 point loss, the goal now is to make that back. Okay, or maybe make half of it back. If you can't make it back, the thing you don't want to do is make that loss bigger. Don't sit there and get long and say, well, I'm just going to hold on, because like I said, now you open yourself up to enormous risk. 110 points is not hard to recover from, okay, on Bitcoin. But 2,000 points or 3,000 points, that's very hard to recover from. Now you're looking at the swing trade magnitude, okay? So you don't want to get mixed up in that. And it's very common for beginners to get mixed up in that cycle. Trust me, I know. I've made all the mistakes that you're going to make. Okay. And that's another reason why I don't push hope or false confidence on people, because I know where that leads. I was lied to for a very, very long time. And I believed in that lie. The same lie that brought you to this business, I believed in that lie. It's a lie. And I know where it goes. Okay. So that's why I try to bring reality to people. A lot of people don't want to hear it, but isn't it better to hear the reality than to watch your money evaporate? I think so. I know, but human nature, it's human nature to be irrational. All right. And I can't change that. So you see what I mean? See what I mean? Good thing I wasn't reacting to that candle, because now it's bearish. All right, let the market give you the answers. The market's not always going to give you perfect answers, but if you manage your risk, right, that's what's going to allow you to come out of this ahead. So like I said, if you could make back the 110 points or half of that, keep in mind, it may take a couple of hours, especially if you have to watch this all day. Okay, so just keep that in mind. But I don't like to let the market consume my whole day. I don't have time. All right, look, green candle. Okay, green candle close. Now, let's see, is the high of this candle taken out? Let's see, 17,769 is the high. All right, we're at 707 right now. So 769. So basically 770 would be the entry. And you're looking for a move back up into this area, which would be 17 nines. Okay. But again, there's no entry. See that? And again, why it's so important not to react. So this is a long setup, but it's not a long trade. There's no confirmation. If it takes out these lows, that's actually going to be a short setup now, because now you have this, it's an inside bar coming off this resistance. Now it's turning into a sell. You have to be able to see it from both sides. Now look, the sell is activating 663. All right, so if this thing starts pushing 650, like the 650s, it's close, then you have your sell signal and your stop would have to go up here. Again, you're risking probably like another 110 points. So keep that in mind. Now on the sell side, since we talked about the bigger picture is generally bearish, it might be reasonable to look for a 200-point move or 250-point move. It may take a few 5-minute candles, but it's more reasonable to give that a chance. Does that make sense? Money you saved me from losing is far worth more than what I've made. I appreciate that, Kev. Not too many people recognize that. I mean, all the people from here, people that follow me very closely, you guys know me for a while. So you guys have seen some value. But the brand new beginner who's completely mindless and new, they don't realize that this game is about saving money. This game is about being defensive. There we go. There's the short signal. Okay. So let's just watch it for a minute or two. Let's see how it goes. So I defined the signal before the break. Okay, I said it was 650, right? And 663. So 650s right now. We're at 639. So it's in play. Okay, so let's see what that turns into. Again, that may turn into a loss as well. It's possible to have 2 losses in a row. It's possible to have 3 losses in a row. Let's just watch this for a minute. I know I have to stop talking. I just like to talk. But do we have to buy a signal on a 30-minute, or can we take this as a buy signal or not? No. So 30-minute is for perspective. You can, but your expectations are going to have to be based on the 30-minute. Okay. My expectations right now for these trades are based on the 5-minute. The 30-minute gives us an idea that, I should be expecting more from shorts. That's the information that the 30-minute gave us. Okay. Whether that plays out that way or not is another story, but it's in line with the market intent, right? The market expectation. So this short, in theory, is likely to test these levels because we're expecting a little more. So I risk 150 points. I'm hoping to make 200 points, maybe 300 points. Is that reasonable in this bearish environment, in this particular bearish situation? Yes, because we just got all that context from the bigger picture. Okay, from the bigger picture, meaning the 30-minute chart. Okay, so at 17, well, Elizabeth, you know what? That's not bad. Okay. If it's inventory and it's small, one argument that we know is for sure here, you're not buying the high. Okay, so Bitcoin may go to 14K, maybe it goes lower, but if you're taking your small bites, you're collecting inventory at good prices. Now, just keep in mind, it's going to take some time. So plan on, that inventory is probably going to take a year, to really see something interesting. You may have an opportunity to get out of that at 25,000, okay, possibly. And the whole thing with inventory is when you have profits on some of it, it doesn't hurt to take some off. When you have some, you don't have to hold the whole thing. You know that. We've gone over that many times. Okay. Nothing wrong with accumulating. It caught my attention. I certainly think these are some good prices here. Okay. Nothing wrong with that. Just make sure it's small and understand that it can go lower. So if it goes lower, make sure you have some money on the side to buy more. Small. You have your target allocation, whatever that is. If it's $10,000, if you're buying 1% at a time, maybe once or twice a month, and Bitcoin gets cut in half, you're not going to be worried about it. Okay, you're going to be like, I'm buying inventory at good prices, and you are. These are wholesale prices. Okay, anyway, you guys, I've been talking for almost an hour. I got to wrap this up. All right, so you guys, I really appreciate spending the time with me here today. I hope you got something out of the stream. Keep an eye on this. Again, this is a good paper trade exercise, and I plan to put on a platform on here so we can actually see these numbers in action. Okay, that's a good close for that candle, by the way. Hopefully the next candle closes red as well. Okay, if that has any weight. Now every clown is talking about shorting. Every clown. I mean, because and as you can see, they represent, they are the voice of the herd mentality. That's why I keep telling people, don't listen to them. Everyone else calling for longs and longs and longs and longs and longs. I was the only one calling for shorts, and I'm still bearish. Okay. I don't think it's the bottom yet, because we need a sustainable environment for that, especially for these things. And I don't see it. Okay. When I see that environment, trust me, I'll mention it. Okay. Anyway. All right, this is not a good candle. We have to see how that closes. All right, I'm going to leave you with that, you guys. So you know where to find me if you have any questions. Anything else, make sure, again, if you want that early bird coupon to my community, send me a private message in my channel, in my thing, right? And I will send you a special coupon, probably like a day or so before I close the premium channels. Otherwise, take advantage of all the information that we're putting in there. JP Trader has put a bunch of very interesting trades that in the stocks that have worked out nicely. A lot of value going through there. Okay, please check that out. All right, everyone. So enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.